Hello everyone, welcome back to Market This Week. This is an analysis of the Indian equity market for week ended 29th of September. We had an extended weekend. Monday was a holiday due to 2nd of October. And what a week it was. If you recall, in our last video, we've been mentioning about the possibility of the Adam and Eve double top, and it seems like the possibility is very much in place with the markets falling close to 2% last week. Got a bit of bounce back from the week's low, but it did come and break the 97 level on the downside. Interesting thing to see is a clear double top kind of a pattern shaping up on the weekly charts. This is Nifty spot. And another interesting thing would be like right from the bottom from where we have this rally, this is the second time that the index has managed a sell-off above 450 points from its highs twice. Last time it happened, it just took a week's time, and this time it's broken down into 2 weeks. But nevertheless, some serious amount of selling coming into the market for sure. Going back to that double top pattern, essentially a break below this low, which is close to 96.85, so rounded off close to 9680, and we had 9687 last week, so teasingly close to these levels. A break of 9680 theoretically confirms this Adam and Eve double top, and in that case it opens up a possibility of downside, which is the height of this pattern. So essentially the highest point of the pattern is close to that 10,200 and roundabout, and about 97 9650 on the downside. So you're looking at around close to 500 points if it breaks this 9670 9680 zone on the downside. Don't see it happen straight away because of the sheer momentum which it fell last week. Let's take one step further down and open the daily chart. As you can see that last two sessions were more like spinning tops, where the market is kind of trying to consolidate some amount of ease off of the rate of selling that we've seen. One beautiful thing that comes up, where I keep my cursor over here, the beauty of this level of 9700 is erstwhile it was the resistances which held really well. We had a breakout, and then the breakout led to a throwback coming back to 97. Now the previous resistance worked extremely well as support once and now twice. So 9700 is like the make or break as I see it over here. I think it will be very uncanny because almost in I think it was late November or December that I did a video, or I interacted with one of those channels where 79 was the make or break. So 7900 and over here 9700. Quite uncanny. So 9700 is the make or break level that we are looking at for the Nifty. Similar kind of pattern you would notice in Bank Nifty as well, where the previous resistances now are acting as very good zone of support. I do look into the exponential 89 period moving average as my long-term decider of the trend, and as you can see that both the Nifty and the Bank Nifty, this is the daily chart of Bank Nifty and this is that of the Nifty, as both managed to hold as of now to this moving average. The three moving averages on the top, the 13, 21, 34, essentially as in a zone of crisscrossing each other. So the order of the uptrend which we had seen from early Jan is now actually deteriorating for sure. Let's quickly look into which are the sectors. So before we go into the sectors, quick view. So essentially 9700 make or break on the downside, and on the upside what we are looking at is bare minimum the high of Wednesday, because that's where the market opened but couldn't held on to, and it was a sharp sell off Wednesday. So the high was close to that 99.20. So we are looking at 99.20, 99.50 on the upside as the immediate resistances. This zone needs to be taken out for any kind of stability on the upside. If 99, 9900, 99.20 is not taken out soon, then expect selling to come in. And I sense that it will take a little time to break 97, but if it takes more time to break 97, I think the break will be sharp. and if it has to hold on to this uptrend, if it has to stay within this 500-point range, then it needs to quickly take out 9900 on the upside. The more time pass it does between 99 and 97, the chances of 97 getting breached goes up. Now, going back to the sectors, let's quickly open up the report designer. So we'll be quickly looking at a 1 week, 4 week, and a 12-week performance of the various indices in NSE. What do we see over here? Last week, few public sector stocks held fairly okay. Metals did fairly all right last week. Let's look at the weekly chart. Nice bounce back from the week's low. Uh, this gray line at the bottom is my sectoral rotational graph. So essentially, bottom line is, if the value of this gray line is above 0, is positive, it's a sector which is outperforming. So metals continue to outperform. Public sector units, few of them did well. We'll look into that a little later. Real estate flat, pretty decent bounce back from the lows. We'll check which led to this move. On the other hand of the spectrum, yes, the banks, the pharma continue to deteriorate. FMCG, mainly led by Hindustan Unilever, are the losers. So let's quickly look into metals, which has done really well. So let me quickly open up the price watch. Let me go to exchange defined NSE and open up the, or I can do something better than that. I can close this. I can open the report designer, and in this case I'm going to quickly check which are the stocks within the metals which actually did well last week. Yes, so quick scan, here we are. So let's check Coal India. Okay, so Coal India is a part of that metals and mining universe. So this is one stock which did really well, though I'm not very gung-ho on the structure of this chart. What do we have? We've got a good move last week. It's an underperforming stock. Look at the way it's been completely range bound. Immediate resistances to look for Coal India is in this cluster and a little above that, which is in these lows, which is close to that 280 mark. So essentially 270, 280 is the zone. Looking at the daily chart, pretty nice move, kind of a spinning top last Friday's trade. Volumes dying off. Awesome oscillator seems to support really well. I sense that it has some more legs to take it further up towards that 280 mark, but that is where probably it will die down. Hindalco. Now this is one very strong chart. Weekly chart extremely strong. Daily chart suggests that we've got a bounce back. Essentially, this stock is making a range for itself, pretty big range. After multiple weeks of outperformance, it's making a range. Same Nalco, relatively better. It's got some fresh legs on the upside, but I guess Hindalco is a much better stock to trade than Nalco. Which are the ones which have underperformed? Well, SAIL has underperformed horribly. So MOIL, on the other hand, though it has given a bounce back, not the best of stocks to look into. NMDC or SM Minerals, not worth it. Tata Steel, definitely worth a watch. Look at the daily chart. After the 3-day sell-off, has gone into a 4-week range. Very small candles, which is clearly reflected by my range indicator, which is dropping down. So definitely a move in the make. I think a break above these highs can give a quick move on the upside, provided the market supports. Right. So that's for the metals. Let's quickly look into the other sectors. Going back to, let's say, user defined NSE indices. Let's run them. There you go. Let's look into which monthly performance. I'm looking at the 4-week behavior. So CPSE index is the one which is doing good. Nifty Pharma kind of flat. Metals, there you go again. Comes in the list of outperformers. The metal index over the last 12 weeks, close to a quarter, is up around 15%. That's big outperformance from the sector. Talking about the last 1 quarter, FMCG, there you go, FMCG and PSU banks, these are the ones which are bleeding. Talking about FMCG, is there any scope of any kind of bottom fishing? Let's look into the weekly chart of Nifty FMCG. Clear breakdown. ITC, Hindustan Lever definitely are the ones which are dragging it down. As you can see over here, my sectoral rotational graph has gone negative long back. It's gone negative. There you go. On early August, it goes negative. So this suggests me that there is possibility of some weakness, and there you go. So let me quickly look into the FMCG space for you, and let's find out if there's possibility of some kind of bottom fishing from this space. So FMCG, let's look at how has been the performance of these stocks the last week. There you go, as I said. Hindustan Lever, biggest drag to the index, down over 5% last week, though it has been an enormously really good outperforming stock, but this time it gets a crack and it's fallen quite sharply. It's still above my E89, so I still have my hopes intact. Awesome, still intact, above zero. So I sense that towards the later half of this week, we might get a bounce back from both Hindustan Lever as well as ITC. ITC, though, structural damage, because you see the kind of underperformance is reflected in this line. And the good thing about ITC, it's kind of levels where it looks very attractive for a medium term point of view. These are the previous highs from which we got a breakout, support, and now back to those levels, teasing with the exponential 89 period weekly average. So 258, not a bad price, but I sense there's still some room on the downside. Marico, on the other hand, is completely range bound, doesn't matter. Colpal, the Colgate Palmolive stock, also actually cracked quite hard. Not a very big weightage on the FMCG, but these two, Hindustan Lever and ITC, definitely worth a watch. There were a few which bucked the trend. Tata Global is one which went up quite sharply, and it looks like it's still got some headroom on the upside. Britannia also exceptionally good, not very liquid though. So essentially, going back to the FMCG, Hindustan Lever and Hindustan Unilever and ITC. ITC definitely one can start looking at close to that 250 mark, and Hindustan Lever I think would try and come down to these kind of levels, which is 1150, and probably find some support. Last week we did talk about the with the IT sector, didn't do much at all. It was quite volatile as I was tracking it throughout the week. Um, Tech Mahindra was the one which held on really well. It was actually flat, but did fairly well compared to the rest. Uh, in fee, I would like to take your attention a bit, because this is one stock which has everything in it to crack. It didn't go up at all. Neither did TCS manage to hold on to its breakout. See over here, it actually failed to break out, came down. But Infosys is something that I'll be keeping a close watch on, because of the very fact that it's not breaking out above that 908, 909, 10 mark on the upside. On the downside, it's very critical, the 894, 893 zone. I think a break of this can lead to an extension of the move on the downside. The fact that last week it outperformed the tech pack per se, and then we did not see a follow through of that. On the other hand, every stock that tried to break out actually came down, barring Tech Mahindra, as a sign of a sector which is kind of underperforming a bit. So keeping that in mind, I'll be keeping a very close on Infosys. Probably if it breaks down, it can give a quick move on the downside. Right. So that's all for market this week, for the week ended of 29th of September 2017. I'm sure you had a good, enjoyed your extended weekend. Hopeful to see some support coming in from the market and some good opportunities to trade this week. Thank you for hearing me out. Trade well, trade wise. Thank you.